Alright folks, so we are looking at a reclaimed fair value gap. I'll show you in a second. Just let me get this trade in. And the stop loss will put above this high here. And the take profit we'll put right down there. Okay. And the fair value gap, I'll just use the line segment, the horizontal ray, to annotate this. And not a rectangle because I don't like fighting with it. Okay. So a reclaimed fair value gap there. Right there. So we want to see it now. Roll over and overlap all of this and attack that low after breaching here and then running into that area there. I'll add one more there. Now once this trades below this quadrant level again in that low, I'll move the stop loss to just below, above this swing high, but not before. As I indicated, the 24,735 as a suspect level. It's simply just because it's, when you can look at it, it looks too much of a foundation's been established down here. With this area here and this area here. Okay, so lots of sell side below here. Didn't quite get below the quadrant level yet, so I'm going to keep the stop where it's at for now. Now, for those of you that are students of my first presented fair value gap, that is there. Small little let's see. Just want to make sure. My eyes are very, very old now. Yeah, it's got a small little volume of balance in here, so that's why I've included that. So here's the first presented fair value gap since this morning, because all of this dropped down. It was very efficiently back and forth, back and forth, back and forth. And then we have this pop-up rate in there. You'll see that the fair value gap exists. I'm not using this little low here because the volume of balance up here exists. So even if a small little gap right here, so let's just start to sell off right in here. It's reasonable for it to act like it did here in the first presented fair value gap because we're in an underlying bull market. So the algorithm does these types of things like it did here. It created a return back into the first presented fair value gap and then rallied up. But now we're getting this sell the high, sell the high, sell the highs, and there's lots of liquidity in here and here. So they'll overshoot that and take out the 735 easily. And I have my order resting at 737.5 just because I want to make sure I get it peeled off. All right, as I said, I would drop the stop down just above that swing high once we pierced that lower quadrant. Let me see if I can finesse this. Get that right there. We'll see if I can get it. One more little false hope attempt to go higher. Another phantom bull flag, basically. Much like this one was when we rallied up. All this bull flagging, retail would have saw that, and it broke down, broke their heart. Traded into the first presented fair value gap, right there. Then rallied up to a fair value gap, and then broke down. Now we're just hanging around that quadrant level. So it's a sticking point for right now. I want to see this fair value gap with that volume imbalance. Keep price at bay and then take out that low and aggressively run right here. And then how we trade there is going to be indicative of what we do the rest of the day. I'm not trying to pick the top of the market, folks. Now, if this were like a Monday or Tuesday and it had done this, oops. If it had dropped down into this area here, that being a good long entry, and then right here adding to it, I would be strongly bullish for for this scenario. But because we've already moved up a great deal this week and it's Friday, I just think that they're going to cool the jets going into the weekend. So it's easy to just simply expect it to take out this very low hanging fruit objective sell side liquidity. That way you can see what I'm looking at. So the internal dialogue I'm running through my mind is how are we laying down candlestick bodies? Are they respecting that fair value gap there, as I would expect it to? Or are we piercing it with bodies above it? And we're not seeing that. We're just seeing the little wicks go up there. So we want to see aggression to the downside. So that way the NQ can break the hearts of longs. And then attack the relative equal lows down here for 735 sell side, as I tweeted earlier, that level was suspect. We want to decisively leave that quadrant level. We don't want to be around it much longer. Start working its way lower. No market replay. covered that up here earlier. And I was thinking to myself, someone's going to say this is market replay. Energetic series of black limousines. This right here is the club to be at right now. This is Club 54. Again, you don't know anything about that. We want to see it get down there. That's the spot to be. So all the black limousines should go downtown to get to that level right there. That would be constructive. That would be a good indication that the in crowd is here to the party. And then 735 would be in close proximity for the next hop. Once we take out that low here, stop will go down to break even and plus commission costs and fees. Not before. Now, admittedly, this is probably a trade that most of you would probably admit, if you're honest, that you probably wouldn't be taking it. You're just probably watching it and seeing, how it's behaving. And probably right about now, you can see how this, on your charts, after the fact, that was used as a sell-off. And the benefit of studying price action live is you start to see these things and you build scenarios where you're practicing it. You're tape reading and saying, okay, hypothetically, we'll see if this thing drops 10, 15, 20 handles before going against you 10, 15 handles. And it's not about the R models, what's the R multiple. You're just looking at, can you read price in its next leg and delivery higher or lower, consistently. In the beginning, no one's consistent. I wasn't in the beginning either. So it looks like immediate rebalance in here. So we want to see it start to really move lower now. I'm watching the consequent encroachment of this discount wick in here, right here. I don't want to see any kind of dilly-dallying around. I want to see it really get down through that and show no respect of it and just slam into that low and go lower. And then reach aggressively for this one. It's almost like I know what I'm talking about. These black limousines are starting to show up at the Club 54. So we're in consequent correction of the first percent of fair value gap right now. In case you haven't noticed that. That was what I indicated here with this buy side imbalance, sell side inefficiency, with the volume imbalance up here towards the high end of it. Watch how it may use the high. If it leaves that gap in here, that's really good. I like to see that, where it fails to get up to the high of it and touch this upper line, the threshold high of that first percent fair value gap. Leaving that gap there is really good. It just shows that it's not willing to even get back up to a premium array, and it should just wilt heavily. Old bones. There you go. It touched that. So you can see it hit the high at the first percent of fair value gap. So now we want to see it roll over and explore and probe not only below that low, but below the low threshold of the first presented fair value gap. There's liquidity resting there, but the larger pool of liquidity is right in here. I appreciate it if you guys are getting anything off of these examples when I'm doing it. You can give the video a thumbs up. I promise it doesn't make me any more money to do that. It just encourages me to do more of it. I mean, obviously I'm going to do what I said I was going to do, but it actually builds my morale about it, because I know it's not an easy task to learn what I'm teaching, but if it's beneficial to you and you're learning, and I've just remembered I didn't move the stop down after it went down. Oh no, I made I did that incorrect. I'm sorry. I said I was going to take that low out, but since it's spending a lot of time inside the consequent encouragement, my subconscious is telling me, put the stop down so that way I ain't got to worry about it. So it's just the experience factor kicking in. But originally I wanted to see it trade below that low, but because we're hanging around inside that midpoint of the consequent encouragement level of this first presented fair value gap, I want to see it really start to move lower. And now, because I don't have anything worrying about if I'm correct or wrong, I replaced the feelings of being wrong or not getting it right or loss or profitability. I replaced that with indifference now. So I completely removed the necessity to worry about or even concern myself with the outcome, and more in line with, is it still doing the things I would expect it to do if it's going to keep going lower? So I hope it kind of makes sense. So now here's my question to you. First presented fair value gap is this area right here, that little gap. We've already used it here. The body's respected it and then sent it higher. We went down into it here and then rallied and failed. And now we're down here into it again. What's the chances of it rallying and creating a higher high today or stopping me out? Very, very low. So where's the liquidity at? The opposing side is below down here, where that 735 Sellside level I told you that was suspect on Twitter earlier. And we're seeing the beginnings of that demise for those individuals that have their long positions with sell stops below that. So look what we did here. We sent the price down below it, but only with the wick. The bodies have stayed here. So we want to see the next candle, or the very next candle after it, be strong down close candle. We want to, basically, what we're doing is we want to see this wick, this discount wick, completely consumed, not left there. And that's how you know that proper order flow is indicating that you're on side, or I'm on side. You don't need DOM, you don't need depth of market, you don't need level 2 data. You don't need to know how many orders are down here or above here. All of that is a red herring, it's a distraction. Like, you really don't need any of that stuff. I mean, it's really nonsense if you think about it, because you're just looking at what's obvious. There's always going to be buy orders and sell orders above and below the marketplace. It's always that way. And it's continuous delivery of that. So we had this little sell side liquidity pool tapped into here. And this market like that. So it's in very close proximity, striking distance to the level I told you down here, 735. So I just want to see it just quickly just go down here and grab it and be done with it, because it's Friday and I have things I want to get to. Hey, Scout, you're snoring? Huh? You snoring, little girl? Right about now, X is shaking her head saying, this guy keeps calling it. And I'm dog whistling, baby. That's all it is. That's all I got to do. And it listens. The market is my sheep, and it knows my voice. There's the 735s, this printed. So let's see if I can get that overzealous target I reached for. We'll get the consequent encroachment of the first minute of fair value gap. If it comes up and stops me out, it's okay. I got real close to my target. I'm going to peel off 2 just for the general principle. So this low here did in fact get pierced. The low came in at 734 even. So that kind of means 735 was taken out, right? I think we can all agree on that. Now, what's the difference between picking a target like that 735 and that low, keeping it there, and having your limit order at that low, maybe 1 tick below, preferably 2 ticks before it, when you're shorting a market that's primarily bullish or a market that's bearish? A market that's underlyingly bearish, having this a little bit more overzealous target excuse me, would be more favorable when it's a bearish market. But when it's a bullish market, you know, fluffing up and trying to squeeze more juice out of the lemon or bleed the rock, basically, when you're in a bullish market, demanding that your best exits be fulfilled, when you look for lower prices than you really should, when you're in a primary bullish market and you're shorting, it's frowned upon. These are the things I learned over the years, and I'm showcasing it to you. There was nothing wrong with having the limit order just above this low over here. And there's a stop out there. So it's not a matter of trying to get as much as you can. It's just a matter of knowing what's possible and being content with that. So that's the example for today. Hopefully you found this one insightful. And if you like this kind of stuff, give the video a thumbs up. It really encourages me as a teacher and lets me know that you appreciate what it is I'm doing, because I don't have to do it.